In this video, we look at how to invest in Fidelity mutual funds. Did you know that Fidelity Investments manages over $4.5 trillion in assets, making it one of the world's largest asset managers? Additionally, Fidelity offers more than 10,000 mutual funds, providing investors with a vast array of options to suit various investment strategies and goals. Investing in Fidelity mutual funds involves several steps designed to align with your financial objectives. First, establish a brokerage account with Fidelity, which can be done online with no minimum deposit requirement. Once your account is active, you can explore Fidelity's extensive selection of mutual funds. The platform provides comprehensive research tools, including fund performance histories, expense ratios, and risk assessments, to assist in making informed decisions. One of the significant advantages of investing in Fidelity mutual funds is the cost-effectiveness. Fidelity offers several mutual funds with zero expense ratios, meaning you won't pay annual fees for fund management. This feature can enhance your investment returns over time, as lower costs contribute to higher net gains. Additionally, Fidelity does not charge commissions on mutual fund trades, further reducing the cost of investing. Another benefit is the accessibility for investors at all levels. Fidelity's user-friendly platform and extensive educational resources make it suitable for beginners, while advanced research tools and a wide range of investment options cater to experienced investors. The availability of both actively managed and index funds allows you to choose investment strategies that align with your risk tolerance and financial goals. However, there are some considerations to keep in mind. While Fidelity offers a vast selection of funds, the sheer number of options can be overwhelming, especially for novice investors. It's essential to conduct thorough research or consult with a financial advisor to select funds that align with your investment objectives. Additionally, some mutual funds may have minimum investment requirements, which could be a barrier for those starting with limited capital. Another potential drawback is the performance variability among funds. Not all Fidelity mutual funds perform equally, and past performance does not guarantee future results. It's crucial to assess each fund's investment strategy, management team, and holdings to ensure they align with your expectations and risk tolerance. In conclusion, investing in Fidelity mutual funds offers numerous advantages, including cost-effectiveness, a wide range of investment options, and accessibility for investors of all experience levels. However, it's important to navigate the extensive selection carefully and be mindful of minimum investment requirements and performance variability. By leveraging Fidelity's research tools and educational resources, you can make informed decisions that align with your financial goals and investment strategy.